Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 4th of April. Starting with Asimilar, which has decided to boldly go to the Aquis market, or at least have a listing on there. Here we can see that the shares look to be just starting that process of bouncing off their lows. We're breaking that line of resistance there from February, around 24 pence. Longer the shares can stay above that, the greater the chance of a move back up to the upper 20s, maybe the 50-day moving average at 29 pence. Over the next couple of weeks or few weeks, and then the bigger picture target up to 36 or 37 pence at the top of that broadening triangle from the beginning of the year. But everything here hinging really on no new lows being made near term. We've got an uptrend line in the RSI window, which is bullish divergence and should provide some near-term momentum for the shares, especially as we can envisage no fresh lows with that in place. On to ARC Minerals, where people are or have been getting quite expectant in terms of what the shares could deliver. Here we're just breaking that line of resistance there from the end of February, and we've broken above the 50-day moving average around 3.5 pence. The longer we can stay above the 50-day line, the greater the chance at least of a retest of February resistance towards 4.5 pence. Big picture target over the next 2 to 3 months as high as 6.5, which would be the top of a rising trend channel from back in July. We've also got the third main RSI bounce off the uptrend line in the RSI window, which tends to be a momentum provider. Let's see if that happens. And ideally, we stay above 3.25 pence while all this consolidation continues. Lots of people also wishing for big things at Audio Boom. Here the shares just getting up to that neckline resistance around 2011, or actually broken through that now. End of day close above that, the mid-March high would reaffirm our view, the technical view, that the shares are ready to head towards the top of an October rising trend channel. That's heading towards £27 now. Maybe see that by the end of next month or even sooner, given the way things are going. And uptrend certainly in place while we hold above the £18.50 area, which is not only where the 50-day moving average is, but also the floor of that rising trend channel from October. And the final thing here is the uptrend line from back in August last year in the RSI window, off which the RSI has bounced on several occasions. Moving along to Chariot, and here you can see that the shares have perhaps over-delivered on what we were looking for. So we had initially 14, then 18, 19. We're now looking for as high as 26 pence, maybe by the end of next month, which is a rising November resistance line. And that's valid while we hold above 19 pence, which is basically today's intraday low. So maybe one final push higher for Chariot. Stock which is also over-delivered in the recent past is Coro Energy. Here we've broken one of our more optimistic resistance lines there at 0.48. Above that, on an end-of-day close basis, we could get a best-case scenario target here as high as 0.7 pence, maybe by the end of next month. Gap higher from last week through 0.45, adding to the bullish mixture there at Coro. Stock which maybe has done rather better than one might have expected in terms of its turnaround in the recent past is Gene Drive. We broke that line of resistance there from January back in March. Lots of bullish divergence there, bullish divergence line there from November, which has helped. Rising 50-day moving average and a gap higher today as well. The view is that while we're above the 200-day moving average at 32 pence, we could hit as high as that December resistance line projection, currently pointing at 55 pence. By the end of next month. On to iGas, which has been one of the better situations of the recent past. Maybe a bit too much consolidation for most, between 25 and 40 pence over the last month or so, but could still see the shares hit as high as 43, 44 pence over the next couple of weeks, while we hold above Friday's intraday low at 32 pence. So looking still quite well poised there at iGas, and I suppose that uptrend line in the RSI window still helping the shares over the near term as well, if I can draw it properly. But there we are. That looks as though that's still helping. Onto i3 Energy, which has had another bumper announcement. That seems to be that all the company does is come up with bumper announcements. And here we've got the stock rising on two different kind of trajectories. The first is that broadening triangle from back in December. Support recently coming in at the 20 pence level. And if we can hold above late March resistance at 22.5, we're looking towards 35 pence by the end of next month. Which is a December resistance line. It's also a one-year resistance line from last year, the top of the channel there, and looking pretty well set fair for a move towards that area the longer we stay above the 20 pence. So this stage only really back below the 50-day moving average there at 19.4 pence, really delaying the upside scenario. A lot of pent-up expectation at KEFI, especially with regard to its Saudi assets. Here you can see a nice little break of the 0.85 pence area, which has been 1 month resistance. Might want to see an end of day close through 0.9 or a weekly close through 0.9 to give us an initial target there around 1.2 pence, which is post-November resistance in the 200-day moving average. Best case scenario target by the end of next month, maybe up to 1.7 or 1.8 pence at the top of a broadening triangle. All the while we've got that uptrend line, the bullish divergence line in the RSI window, which should start to kick in quite strongly, as will the effects of that rising 50-day moving average near the lows. That's normally a decent momentum driver. Onto Live Company, which is still continuing to enjoy the positive vibe of a post-pandemic environment, at least in some areas. Here we've hit the line of resistance, top of that triangle there from August, around 7.1 pence. End of day close above that, or a weekly close above that, we could hit 9.5, which is the top of that rising January trend channel, maybe by the end of next month, or with a fair wind, even by the end of this month. So earlier really back below 6 pence, recent support really delaying the upside scenario. Stock which is looking and has been looking interesting is Myla Resources, if we get the right company there. Here you can see that shares have just made a nice little breakout through 3 pence. We've been targeting up to 3.8, which is the top of the Y channel from back in November. But we could have a range break target, the old range 2.0 pence or 2 pence to 3.4. If we can break 3.4, then we would have an implied 1.4 pence upside equal to the broken range, taking us to 4.8, and that could be seen over the next month or two. Rising 50-day moving average at the moment helps as well, so the more price action above 3 pence, the better for this situation. Only back below 2.5, and the 200-day moving average delaying the upside scenario. Couple of situations to go now. First is Quadrise, which is gapped up through its resistance line there from back in August. So it did that on Friday. We've held the gap and also broken above the 50-day moving average at 1 3/4. But the longer we stay above the gap floor at 1.55, the greater the chance of a move up towards the 2.7, 2.9 pence area, which is post-December resistance. We also have a bullish divergence line to help the situation along, and that gives us more confidence in the upside. Finishing off with a stock which has been gapping around over recent days. We've had an island reversal. We've had two or three or four gaps to the upside now for Thor Mining. And the view here is that while we're above the initial the February resistance at 0.78, we could see 1.15 at the top of the May broadening triangle, and maybe see that by the end of this month. That's it for me today. More updates tomorrow.